This video is sponsored by Woo. It's going to be going on covering order flow, footprint charts, and basically everything kind of to do with that for those who have no idea what it is, but also to dive a bit into more my kind of concepts around it and a few basics to kind of get into. So to begin with, the software I'm using is ExoCharts. You can get a month free by using Woo X below. First link in the description. I highly recommend it, and we're going to be covering a lot of this stuff here, but it's all free. You get all of this stuff, but yeah, we're covering footprint chart basics, candle cluster text settings, tick sizes, exchanges, volume spikes, delta max and minimum in general, open interest, trap traders, some other bonuses that I kind of might want to get into if we get along the way. I don't know how long this video is going to be. It's my first take on it. So yeah, and as well, if you want the templates and workspaces, if you head over to luxury.trade, is a website, there are template section, and you can get the free downloads to the workspaces that I generally use for this stuff. But yeah, like I said, timestamp should be in the description. ExoCharts software I use, and we're going to be covering that today. Like I said, a 1 month free down below. Alongside free coin market manager as well. Alongside that, just deposit $500, take a trade, and obviously if you do actually end up trading size on there are some actually massive benefits to that. Like I said, everything is free that I'm doing. So yeah, let's get on to it. Look, this is a great start. Footprint. So it's all the footprint is, and what you will be seeing within this video mainly is going to be made up of market orders, only market orders, right? And I think it's important to understand that for every buyer there is a seller, and vice versa. For every seller there is a buyer. So for every order to basically hit the books, someone there needs to be able to take it. Someone needs to be able to hit it, and I'm going to go into that in a bit more in a second. You have multiple different cluster types that we'll be able to show you. So on this right here, what you've got here is the delta cluster, and I'm going to be covering this in great detail. The footprint versus the heat map. So this is what I wanted to really cover to begin with. Now, probably because a lot of you are probably familiar with heat maps, like really a lot. So I've just brought this up on the main chart here, to be honest with you, and this is so you can have like multiple different workspaces. But if we just go to here, for example, this is a heat map, and everyone's looking at where limit orders are, and there are some benefits to this, but I'm going to talk about the footprint in a second. There are some benefits to this chart, and this is where you can see where resting liquidity potentially is, in the aspect of people want where limit orders are placed on the chart. Where are people having their limit orders? Sell walls, buy walls. The problem that I generally have with this is that these orders can be removed fairly quickly as the level is approached. I would prefer to look at the DOM for this. So yeah, I mean, the only benefit I personally see from the heat map is, apologies for that. The only benefit I see from the heat map is actually identifying where those positions could be from beforehand. Seeing where these buys and sells are. Even with that though, I would prefer to look at it through the DOM's perspective. If you can see here on the DOM. Yeah, it's really laggy for some reason. On the DOM, you'll be able to see this essentially, and it will show you the buys and the sells, etc. From well beforehand as well. So I know why this is lagging, by the way. This is because I've got it on 1 tick. We can update this to like 100 ticks, and you can see here right now what we've got: a buy, a set. This is your sell wall, so equivalent to what you got on the heat maps. Your buy wall, equivalent to what you got on the heat maps. But you can see if you add a option within this, and this video is not on the DOM. I just wanted to cover this really kind of core concept to begin with. If we add pulling and stacking, you can see what people are adding and removing as a level is being approached. This is really important, okay? Just to get this concept, you can see how quickly people can add or remove orders. I mean, you lot probably place limit orders before. If it approaches you place a limit order in the books, it gets approached, you can instantly pull that order, and it's going to be kind of irrelevant. But again, this video isn't on heat maps. I just wanted to give my take on this. And again, the footprint, right? When you see an extension in volume, or massive buy orders coming, or massive sell orders come in, right? That is someone on the other side is getting filled. The other drawback to this, in my opinion, is that most people have the assumption in relation to heat maps that this is, first of all, this is one big player in the books, one big player, and it could be, of course, but from my experience, when you size up, etc., you don't make your positioning as obvious as, placing large buys and sell walls on the books. That is generally used to spoof orders. Now, through legacy markets, this might be the case, but from my experience through crypto, I don't see too much of a benefit in this, because most people tend to spread their orders out, and it's they're not going to make it extremely obvious to be like, well, this is a massive order on the book to get filled. They'll likely spread their orders through 10, 20, 30 plus 50 Bitcoin, and it makes it harder for them to track. So in reference to like iceberg orders, okay. So hopefully that makes a bit of sense in there. In terms of heat maps, again, like I said, limit orders are dynamic. Market orders are not. Now, what I mean by that is limit orders can be instantly moved, right? Like I said, with the buys and sells, they can be instantly moved and pulled, and there's a lot of dynamic variabilities with that. Whereas with market orders, if someone's getting filled at market, like this up here at 1.9 million, if we just highlight this quickly. 1.9 million buys, that's someone on the reciprocating side being filled 1.9 million. I mean, it might not be one individual, that could be 1.9 million people trading $1 increments, but obviously that probably isn't the case. But it's people getting filled nonetheless. These are categorically people being filled, and it's easier to view in my opinion. So that's I wanted to cover that there. Okay, tick sizes now, probably to cover this really in a sense, if we just open up a fresh chart. Bybit, BTC USDT. We're going to open up a fresh chart here, and essentially tick sizes, like I said here, the minimum price change between different bid and offer prices. So in crypto, what you'll see on Bitcoin generally is 0.1. That means 10 ticks is equivalent to $1. But it, and they change based upon volatility in terms of your settings. So if we just head over to EXO here, for example, we've got one. It starts off the lowest tick when you start this off, and this is probably something we should change, because each single block here that you're seeing, so this is one block, this is another block, this is another block. These are all based upon the tick sizes you're seeing. So if you increase this, it will group them together to make the data easier to be able to see. So if we group this now to, let's say, 10, right, you can see it just grouped them together, as well as the text within it is also grouped together. So now you've got a bit of a better view of it. Even this is still too high, especially at this high right here. You probably want to update this to 100. Okay, and now you can see the data is much more it's a bit less a bit more compressed in the sense of being able to see the data is a lot more visually appealing, and you can see easier, rather than if you put this on one tick again, the data you can't see anything too much. Is showing you one tick increments, whereas like this, like I said, $100, dependent on volatility, it's easier to view the data and get a better idea of what's going on at each price level. So, and this is based upon volatility. So when price is much more volatile, like right now, this is on 100 ticks, and you've got this kind of blocky aspect to it. But if you are, it's quite volatile right now at $72,000. But if we were to go all the way back to where Bitcoin's at 20,000, 15,000, etc., this is probably decreased to like 30 ticks, because price is not moving as fast as it is now. Therefore, you're not going to need as high as a tick size. But yeah, what I generally use on BTC USDT 15-minute chart, right now it changes, right? But 80 to 150 ticks, it really changes. But the idea is that you get a constant feel and look for the market, and I think this is down to your own personal preference. How blocky do you want the ticks to be, the blocks to be, and it's kind of down to just visual aspect to it, and there is no strict amount. There is only strict amount within the TPO charts, and I'm not covering TPO within this segment, so it's really important I'm not covering TPO within just mainly the footprint. Okay, so that's tick sizes for you, if that makes sense. So yeah, anywhere between 70 and 150 on the 15. But if you're using the 1 minute, then obviously you're going to probably want to drop it a bit, and it will really change on that front. Okay, so hopefully that makes sense. Just heading back to this now. Candles, clusters, and text types, right? So obviously what you've been seeing me go over right now is mainly delta clusters, right? There's a delta clusters, and if we just go back to here, each candle, you can see it's red, green, and that's based upon the delta, which I'm going to cover what delta is in a second. Basically, in very short term, the difference between buyers and sellers. You can go over to the top here and go over volume profile, delta cluster, to get a better view. And this is, again, down to the way you trade, reading of the market. For me, I'm always kind of using delta cluster. There's also volume profile. Probably a lot of you are familiar with this. I chose delta profile, volume profile, where you can just see where's the most volume coming into play within each individual candle. A better understanding, obviously, so you can start identifying where is potentially trapped volume in relation to the candle's close. You left all this volume behind at the high, the point of control, and then obviously you've got the candles closed down there. So yeah, this is, there's so many different cluster types to be able to use. Personally, I stick this on Delta cluster, and it's basically going to be showing me where it's green, there's a lot more buying going on, and where it's red, there's a lot more selling going on. Within this as well, there's also a value area point of control, value area high, value area low, and point of control of every single candle. Essentially where the most volume has been spent within each individual candle, depending on your settings. Okay, so for example, within this candle here, and it's not as clear within this specific cluster type, but you can go to we'll change this to volume profile. You can see really clearly here, okay, you have the value area high of the candle, the value area low, and then the point of control is that big red one in the middle. So you can see where the outer edges of the shading come off. That's the value area high, value area low, and then you've got the middle bit there, and that's where the most volume has been occurring within this part of the candle here. Really important, in my opinion, just a heads up, to be tracking this value area section in reference towards where the candle closes, because then you can start to identify where trapped volume is. Okay, where has a candle closed in reference to the value area, because that's where the most volume is. But like I said, there are tons of different ways to visualize the data, bid ask, etc. Open interest is really interesting, which I'm going to get into open interest in a minute, or a bit later on down this video. But you can have text types as well, so volume, delta, bid ask. Okay, I'll stick this on my trusty Delta cluster, and I'm going to stick the volume or the text type now on just volume. So each individual candle, each individual tick bar will have, okay, there's 94.5 Bitcoin in volume going on in this candle, or at this individual price tick level, and so on and so forth. Okay, and this is really interesting because this isn't delta. The actual text setting is volume, but the bar coloring is based upon delta. So you can really mix and match the different things you're going to end up seeing there. Like I said, color shading indicates aggressiveness in delta or volume, either in delta or volume. Depends on your settings, right? Because on this case, is shading based upon delta, so where's the aggressive delta coming in. If you changed it to volume, it would shade where the most volume really is coming in. Preferably what you'll see, for example, if price comes up, I want to increase the tick size here. Okay, what you want to see here, look at this. So you can see, I can really easily see, even without any text type on, that there's a lot of buying going on at this high here. I mean, look at the shading, it's massively aggressively green. You can change this within the settings. This isn't a settings video. Again, there's a full complete course on ExoCharts desktop. There's the first link in the description. It's Exo course. It's just deposit $500, take one trade, and you get all of that stuff there. But hopefully this is making sense in reference to just a few of the basics, and in a bit more detail I'll cover the rest as well. But yes, coloring, etc., is important to identifying where trap traders are just visually, and a lot of people kind of just skip the core concept of that. Like I said, my favorite is actually the imbalanced text type. I'm not going to cover this in too much detail, but essentially you can start to see really easily, it kind of just livened up the chart there as to where people are aggressively buying, and the market orders just getting smashed through. And it's comparing diagonally. I won't dive in, I didn't plan on covering this, but I'll discuss it briefly. Market buy, right, and then it's comparing against the market sell on the opposite diagonal side to the bottom, and that's saying these orders smash through this, creating an imbalance of a set percentage based upon your choosing within the settings. Sounds a bit confusing if you have never heard of any of this before, but that is kind of the scenario what you're going to be looking at, right? If we're looking here, 89 Bitcoin, 54 Bitcoin, there's like a 2x imbalance here in buys to sells, not 2x, but just under 2x. So that's not an imbalance. This here is a lot higher, so yes, and so on and so forth. Respectively, if you're looking at the sells, it's comparing it against the buys on the opposite side towards the right upper ones, and that's that. Okay, so that's my favorite text type. You can really easily identify where buyers and sellers are coming into the market, just through looking at this data. And yeah, it's not too confusing in my opinion. You've got all these different settings. And again, you've got all my templates as well, so we'll go over that. Exchanges. Now, this is, I kind of went over everything. There's a lot more to cover in this, but I've kind of went over everything in reference to the basics of things. Now, most people will always go, is there a benefit of looking at aggregated markets? And I'm not against this at all in reference to, aggregated data. And ExoCharts actually, if you're watching this in, I don't know, a few weeks, then maybe Exo has aggregated data by then. But if you're watching this on the first day of release, then it probably doesn't. But the case of this in looking at aggregated data, do I think there's a benefit to it? Yes, if you know what you're looking for and you can categorically say you have an edge in doing so. I'm here to tell you that you don't 100% need to be looking at all markets to gain an edge on it. I think that's extremely important to understand. I think the concept around that you must be looking at all markets to have a good view of the, a really proper understanding of the data is, in my opinion, not so good. You don't need to. I feel like individual markets, for example, BTC USDT on Bybit, and then someone else looking at something else, they'll generally get a similar perspective upon the order flow. So looking at all of it together, it might give you an edge, but I'm here to tell you that it's not 100% necessary. And actually, the way I do it is I look at mainly WooX and Bybit, primarily Bybit for the order flow, and then I'm trading on WooX, right? Okay, and I'm looking at BTC USDT. Now, you've got synthetic volume. So for those who don't know what synthetic volume is, right? If we just go over to here, you're going to right click the chart settings, and then go to where's this data source. And then what you're going to do is, where is this? Use synthetic volume. Okay. So right now we're going to be, right now you're seeing the data in Bitcoin. Okay. But I want to change it from Bitcoin to see it in USDT. So we've got this setting here, use synthetic volume, hit apply and rebuild. Take a few seconds. And now when you zoom in and see all the data, rather than Bitcoin, that's now $2.3 million, $1.9 million rather than Bitcoin. And it's just down to preference. That's what I use. Just wanted to cover that for you all. But yeah, that's synthetic volume, Bybit, BTC, USDT. That is what I primarily trade. But you've obviously got all these different pairs that ExoCharts has to offer, and exchanges and stocks, etc., that we have to offer. So go for that. Now a few more concepts in reference to volume spikes. So volume in general, the amount of transactions going on, the amount of volume that's appeared within each of individual candle, looking into the candles. You can look at this within the FPBS, and I'll cover this in a second. But volume spikes in general are where you are comparing this is how I do it, comparing the volume against the average. So for example, this candle here, how is this candle's volume comparing against the average of a previous look back amount of candles? So if it is 2x the average, you're going to get this spike. Now you can look at this on TradingView, through a volume sweeps indicator by Leviathan. Go check that out. Like here, for example, you can see there's a spike in volume, so it highlights it here. This is a spike in volume, this is a spike in volume, and so on and so forth. But with an ExoChart, right, we don't have this sort of spike in volume thing. You can have shading to represent this. So if we head over to ExoCharts here, what you're going to want to do is in the top right or top middle, indicators, FPBS, and we're going to max this out a bit more, and you can see this top bar, FPBS settings. We'll delete a lot of this for now, and I'll add it back in a second. Candle volume. So this is just going to be showing you the volume within each individual candle, and showing you, how the volume is in reference to previous candles, and going, okay, look, this is a large amount of volume, we're going to shade it darker. You can change the steps. So if you want a better view, I would change this to something like maybe 5 even, and now you can really see spike in volume, spike in volume, spike in volume. Now the idea for spikes in volume is to, I primarily trade reversals. I think this is important to note. I primarily trade reversals, and a spike in volume would generally mean people are actually, if there's aggressive selling coming in here, for example, 90 million volume, 70 million volume. Okay, and you can see within this candle type that we've just set up, by the way. So sells on the left, buys on the right. Well, bid ask. These are people you got to think in the aspect, and this is why I always kind of bring it back to heat maps. This isn't just someone hitting 7.6 million market sales and nobody on the other side is getting filled. This is 7.6 million sales and the order book is holding up. So that's those 7.6 million, worth of sales actually getting filled at this level. And this is why I prefer looking at this, because these orders are already filled. These orders are filled. There might not be one individual person. This could be, a bunch of really small retail traders who are, who end up trading and market selling into a level. But someone on the other side has a market buy wall, or are getting filled here at this level for a limit buy order, and that's really important to understand. Okay, because that's why looking at volume spikes is just generally, when you have a lot of volume in one area, like these two areas here, that's indicating that there's a lot of people actually getting filled on the opposite end of the market. Not just people market selling getting trapped, but actually people having limit orders, limit buy walls potentially right here, getting filled obviously aggressively at these levels here. It's really important to understand that. Okay, and that's why, again, I'm not saying heat maps are irrelevant at all, but I just prefer looking at this against them. Okay. I've lost where I was completely on this. Volume spikes, yes, but that's what volume spikes do. Again, you can look at the shading to identify where that volume spikes are coming into play. Really, really important. Again, at the buys at the top here, right? You can see that these are, 5.1 million, and this is important to understand as well about this concept as well, in reference to having in this case, it would be a sell wall that's here. What's important to understand is that if there was no sell wall, price would have moved, these lot would have had a bit more slippage, and it wouldn't show 5.1 million at one level. There has to be someone on the other end of this receiving this level into a limit sell order. Otherwise, this would have been spread out. Yeah, we don't know, further, and price would have moved much higher. Okay, so that's how it works. Market limit orders, one for one. And it's extremely important to understand, even at the very top end here, we don't know, and I'm going to cover this in a minute, market buys coming into this level. It's not necessarily new people coming in. Okay, so yeah, I'm doing this in one take, so I'm hoping you lot are appreciating this. Is it's going to take a while. So that's volume spikes. Delta, right? Like I said before, and I'm going to cover this now, the difference between buyers and sellers, within a given candle or tick region. Okay, so my god, my brain has my brain's gone numb. The difference between buyers and sellers within a given candle or tick region. So for example here, why I say given candle is because when you're looking at candle delta, okay, I'll cover this now. If we're looking at candle delta, per candle delta, you have 8.8 million in this candle here. So within this entirety of this candle here, this massive candle, taking the buyers minus the sellers, it gives you 8.8 million positive delta. Now, when I say per tick region, if we change the actual text type to delta, right now, this is now, rather than looking at per candle, we're looking at it per price increment based upon your tick settings. 2 million delta there, positive, 2.7 million there, positive, minus 256,000 there, negative, and so on and so forth. That's why you can look at the few there. But that's delta. If you have, just briefly to explain this, if you have 5 million positive delta, 3 million negative, 5 million buys within a candle, 3 million sells within a candle, your delta after the end of this, very basic, 2 million positive. Okay, so nothing too complex there. But if you're looking at the bid ask or the imbalance, okay, bid ask, by the way, is the same as imbalance, just the imbalance highlights where you're seeing overpowering on either side of the market. It's literally just taking up the entirety of the right column, entirety of the left column, and finding the difference. It's tallying them up and going, okay, these are total buys, these are total sells. What's the difference? That's the delta. Okay. Now just heading back to delta, in this case, delta max minimum. Delta is dynamic. Okay. So I've written these notes here for you. So this is the highest and lowest points the delta reach before candle close. Yes. So if we're just heading to this, obviously this is now a bit more of a complex topic, but I'll describe this. Okay, so you've got delta max, delta minimum. So if we just go over to the FPBS first of all, and we add this in here, clone the row, and we're going to go max delta. We're going to clone it again, and we're going to go minimum delta. And you've got, all of a sudden, you've got these different values here. If you're just looking here, 8.8 million delta final, 37.4 million. These numbers, they look random. It looks random to you. You're thinking, what the hell? How is this? It's not making sense. A good way to explain this is that the candle starts off, every candle starts off with 0 delta. Okay, so this is the way it's going to work. If we just highlight this again, so we're going to have a bar, okay, and the candle will start off at 0 delta because there's no buyers or sellers at immediate start point. Every candle starts at 0. And then what you might get happen is maybe I'm going to try and replicate this candle. Is you have maybe minus, a few more aggressive sellers coming. It pushes the delta down to minus 33k throughout the period of the candle. That's the lowest it goes. And then it pushes the delta all the way up. It comes all the way back up here to 37.4 million, for example. 37.4 million. Hopefully you can see that properly. And then a ton of sellers come back in upon the candle's closing. And then that brings the final delta down to 8.8 million. Okay, so what has happened here is that although you're just seeing the 3 components of the delta, there's a lot's been going on. It doesn't just appear poof and it's 8.8 million positive delta. We've had swings to negative 33k, up to 37.4 million, down to 8.8 million. That's what it's just ended on. Okay, and it's important to note that there might be differences between these values, and this is what I call extended delta. So this is the perfect candle for it, where the candle has closed well below all that positive delta in itself, but you can see here it ended on, the candle's delta ended at 8.8 million, and there's this massive discrepancy between the amount of buyers that optimally came in at 37.4 million. These lot are massively trapped, especially if you're looking for a short trade. This is something that you'd ideally want to see, because you'd want to see a ton of buyers trapped, and they're trapped clearly up here. But overall, you can see it ended at 8.8 million, and there's a discrepancy here because the delta max is 37.4 million. Inversely, when you're looking at a low, I've just chosen a good example already. You've got a final delta, and this is what I refer to it as final delta. Okay, I refer to this delta, it's just called delta, but I refer to it as final delta, negative 12.9 million, and the delta minimum in this case is minus 30.5 million. So there's a massive swing from one point to another point, okay, in terms of how the candle has played out overall. And then your job is to kind of identify, well, where is the majority of this delta trapped, if there is any, and then how is the candle closed in relation to it. So for example, here, this is where this is kind of where your discretion is coming into play, because I'm going to say here, well, look, there's a lot of selling imbalances down here, well, the likelihood is, and it's easy for me to do this now, but this is where the majority of that selling is coming into play. The candle's closed up here, okay, and that is where the negative delta is trapped. And it's really good, because obviously you want them to be at the very bottom or the very high if you're looking for shorts, okay? And that's how that delta, extended delta, and delta max and minimum work. It's looking at the swings, it's looking at, extended delta is looking at the discrepancies between delta and delta max and delta minimum. But that is how delta and delta max, it's really important to understand that. At least in my opinion, it's really good, and you can quantify that type of data. Okay, losing my voice a bit. Open interest. You have to look at open interest in comparison or with trap traders, for example, open interest and trap traders. So open interest is new contracts entering or exiting the market. So if we just head over to the chart, open interest, and you can add it at the top here. Okay, we're going to ignore everything else for the moment. But right here, we got the idea that new people are coming into the market, right? Really important. I always see this. No one really talks about the combination of open interest and delta too much. It's extremely important because right now we can go, well, there's new open interest is really increasing. We don't know whether that's new longs or new shorts yet. Even with what I can see here, price is moving up, open interest is increasing. That doesn't necessarily mean that it's new longs opening. It most likely is, but there's a possibility it might not be. So open interest is increasing here. Okay, and so these are different combinations you can have, where you've got positive delta and open interest is increasing, that's new longs. Where you've got positive delta and open interest is decreasing, that is shorts closing. And then you've got negative delta, open interest increasing, that's new shorts, and so on and so forth. So you need to combine a multitude of these to actually understand what's going on in each individual candle. So what I plan on doing within this one here is actually just going through an exercise of identifying and showing you how I would identify what's going on in any individual candle really quickly. And it's going to be called, I call it like the what, where, kind of semantics. But what we're going to do here is we're going to hide everything. I really want to get you to focus on certain things. So even ignore the delta max and minimum. We're going to be focused on three things: the actual delta itself, final delta, the open interest, and the candle itself. And this is kind of where I always come into the concept of simplifying order flow. I think a lot of people can really get hooked up on diving too much into the semantics too much, or really diving in too much into the nooks and crannies of things. But I think it's important to go through here. So pick a candle, any candle, whatever your eyes are going to see here. I'm going to pick this one here. I have no idea what's going on here. Okay, and this isn't the easiest one to do. Nonetheless, it's still fine. But what I'll just do is open interest increasing, negative delta of any form. Obviously, it doesn't really matter. But of any form here, open interest increasing, negative delta, my eyes would go, okay, so this is predominantly within this candle here. Right, this is actually new shorts opening. Then you would go, okay, so where are those new shorts opening? Let's look at this side here on the left side. Where is the majority of that negative delta coming in? Well, you've got some up here. I wouldn't say it's too much. Imbalances down here, and here. That's where I would say the majority is. That's where the majority of those new shorts are coming in. Okay, let's pick another one. I think this one's even better. The next one, heavy open interest, and this one's even more aggressive new short. So I would say this one is really primarily new shorts opening. in an aggressive format. Okay, so you can easily just go new shorts opening, open interest delta, and then you can go, oh look, that's the majority of where that negative dark colored delta is coming into play. Again, you could look at the value areas and where those are in relation to things, but I would then go, look, the primarily, the value areas here, this is where the majority of the negative delta is coming in, open interest increasing, these are new shorts. You don't want to see price come above these levels, otherwise the shorts are offside and going in that position. So that is kind of what you'd want to be looking for. If we just go back to this, actually, let me just make sure I'm going through things correctly. This is open interest and trap deltas. I think this is the last slide anyway. But just going through this, I wanted to go through a few examples here of understanding this, because right now what people might be insinuating from looking at this is, oh look, there's a lot of buys coming in here. This is so much buying, and like I was referring to, like the order book and stuff, and looking for essentially sell walls, etc. These are people getting their orders filled up here, right? Through these buy orders. But these buy orders aren't necessarily, this is how I would look at it, these buy orders on the right hand side aren't necessarily people longing market longing. It's actually people getting stopped out or closing their short trades that are pushing the market up. You got to remember, if you're in a short and you close it, you're actually market buying, and that it can be represented through the footprint itself as well itself. The beauty of it is that it's only showing filled orders. That's really good to identify. But also the beauty of heat maps, etc., is that it's showing you where potentially spoofed resting orders may be, etc. I'm just not a big fan of heat maps, to be honest with you, because you can see a lot of it through this, to be honest, if you are quantifying the data correctly. Okay, so you can see here, okay, this is new longs opening, really easy, open interest increasing, positive delta, new longs, they're caught offside here. At this point here, as soon as these two candles are lost, you can be referring to these candles low, these candles are lost, and they're offside. Let's look for a flush, because once you're offside, you've got to be thinking this is the way it works. In terms of a few concepts, I didn't plan on going through too many new concepts here. But if you're offside, imagine you've opened a new long, and then the market goes offside, right? You're actually like to then start puking and closing out your position, which is, again, when you close a long, you're actually shorting into the market, which will actually help further fuel the move further down. Okay, and that's how you can actually trade off trap traders. In a similar fashion, if I draw out a bit of a diagram here. Okay, this isn't a good example, is it? But I'll do it nonetheless. And all of us, the way I'd like to trade off trap traders is by looking just for candle closes above where those majority of new shorts come into play. So imagine you have a level of interest, which is here. Price, then open interest increasing, negative delta in this candle, the same thing in this candle. And then I would say, okay, if price reclaims this candle's high, then these two candles are offside, and I would be looking for a much larger move up, because then those two short position candles have to then puke their positions. Okay, so there is a lot to kind of take into it here. Again, here you can see open interest increasing. These are all positive delta, so this is all new longs. Even at this high, this is really interesting to see. I did post this as well today, but irrelevant. Open interest increasing, positive delta, so that's new longs. Where are those new longs opening? Well, that's where you identify up here. So always just go open interest delta, and then dissect within that actual candle itself where those positions are opening, if there are any new ones. 8.8 million positive at the top end of this candle. Okay, so you've got a few things there that you can pick out, which are really, really interesting. Same down here. Again, it has to be at levels of interest, not just random, but open interest increasing, negative delta, and start doing that. There's something that I didn't mention. I think it must have got removed, or something that I was going to mention from this, is that you can do replay exercises, which is really important. So if you right click and then go to replay from here, we can start to replay the order flow data live in real time and start practicing what you would be doing, if this was the actual case. So you can start to go here, okay, well, look, and you can start to replay forward into levels of interest. And it's a really good way to practice and get into drills with the order flow. The exact same way I do with a few of my people that I teach or whatever. It's one of the key things I would actually tell them to do in their off time. So hopefully that has made sense to you all. Delta, volume spikes, exchanges, tick sizes, footprint, all of this stuff is really, really important. Again, the exo charts that we've just gone through now is free. There's so much more to this, and this is just me kind of going into a video for you all here. This is by far very much surface level. Very much surface level in reference to what I've been going through here. And there's a full exo charts course in the description. It's completely free. Just go WooX, take a trade, and if you can't do that, then DM me and I'll sort something out for you all. but it's free. Thank you, Works, again for everything. And hopefully, again, if you want the templates in the description that I use, and thank you for everything.